Welcome back, gearheads and finance buffs. Today, we're diving deep into the world of Snap-on Incorporated. Buckle up, because we've got a toolbox full of metrics to unpack. First up, let's talk about P/E ratio, or price-to-earnings ratio. Snap-on's PR over the trailing 12 months sits at 14.29, just slightly below its 5-year average of 14.47. And looking ahead, the forward PR is an enticing 13.32. That's like getting a discount on your favorite wrench set. But wait, there's more. Check out the PG ratio, standing at 3.76. That's the price-to-earnings growth ratio, folks. Think of it as the turbo boost on Snap-on's growth potential. And remember that a value around 1 is when a stock can be considered undervalued, so its growth prospects are not so good. Now, let's talk about insider secrets. Insider ownership sits at a solid 2.01%. These folks aren't just along for the ride, they're in the driver's seat. Zooming into profitability, Snap-on's return of equity, return of assets, and return of invested capital are off the charts. With a 21.17%, 18.74%, and 21.22% respectively, Snap-on is revving its engines for success. These numbers indicate how efficiently Snap-on uses its shareholders' equity and company assets to generate earnings. And speaking about earnings, the earning per share or EPS comes in at a hefty 18.74. And with EPS growth forecasted at 3.8% over the next 5 years, the future looks bright for shareholders. Speaking of growth, let's talk about Snap-on's evolution over the past decade. With a compound annual growth rate of 11.36% for earnings per share in the past 10 years and 15.31% for free cash flow per share, Snap-on is like a fine wine, getting better with age. But wait, there's more! Snap-on's dividend yield is a juicy 2.65%, with a mouth-watering 15.55% growth over the last 10 years. Additionally, with a free cash flow payout ratio around 30%, it is clear that this spectacular growth will be kept in the near future. That's what I call a dividend delight. But what about the nitty-gritty of operations? Snap-on operating margin stands tall at 25.65%, while its profit margin smiles back at us with a charming 19.79%, indicating how efficiently it turns its revenue into earnings. Fasten your seatbelts because we're taking a trip down memory lane. Over the last 8 years, Snap-on has been on a roller coaster of success, with earnings and revenue skyrocketing. But hey, the market's been not sleeping on this gem, giving it a bit higher love than VO during the last 5 years. Now, let's talk about financial health. With a debt-to-equity ratio of 0.25 and long-term debt-to-equity at 0.24, Snap-on is steering clear of debt potholes, suggesting excellent financial management. And check out Snap-on's market cap, standing tall at $14.92 billion. And during the last 52 weeks its market price has grown by 11.1%. Finally, analysts predict even more gains, with a target price of $282.56 in the next 12 months, representing a sweet 6.23% upside. But hold on a wrench-turning minute. My calculations put Snap-on's fair value at $266.45, right around the current price. Looks like we've got a potential fair valuation on our hands, folks. Well, there you have it, folks. Snap-on Incorporated, a powerhouse of performance and precision. Keep those wrenches turning, and remember, when it comes to investing, always tighten your bolts and ride the wave of success. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!